again, 1,000 points in one day as far as a drop. Stock market. Warren Buffett sold off all his Apple stock. I was
Yeah.
told that he's the leading owner of that. Is that correct?
He sold half his stake in Apple last month. He had sold some earlier, but to sum up, listen, this, many stocks are wildly expensive and many stocks are wildly cheap. We live in a world that is run by ETFs. So if you yourself own ETFs, which I don't, well, maybe once in a while commodity ETFs. But what I'm saying is that the world has changed so dramatically that if tomorrow morning the American public just starts selling stocks, they'll sell every stock because they own them and every because they'll go to the ETF at Vanguard and start selling the world symbol VTI. I actually must tell you a couple of things. One, rates are going lower. I said to you, but I said it on radio a long time ago. I said in February, listen, the real surprise is that by summer you could have no inflation. And people are like, what? Listen, this has already gone through. Things are going to slow down. I said in March on another show that we're entering a recession now. Now, I don't know if we really are. I mean, I don't know these things. Like I know certain things, like we can't pay the
If we
interest on
really
that.
want to fix the problem, Steve, shouldn't we be going back to, and this is kind of horrific, but to go back to when Reagan was in there with Volcker and put the rate sky high, and then that's how you somewhat fix the problem. It's going to take a long time. There's going to be a lot of pain, but I think that's the solution. Do you agree or disagree with that?
I disagree from the standpoint of that rates are really high. In other words, it's always relative to inflation. So in normal times, what should happen, and the Fed Reserve didn't do this from 2007, 2008 till like 2021. The whole thing is bizarre. They shouldn't have done any of this stuff. But by keeping rates so low for so long, people brought more stuff out to the future because they don't have to pay for it effectively as much, right? Houses, everybody has a house too big, et cetera, et cetera. What I'm saying is that if inflation, look at oil is down, copper is down. So when you start seeing these inflation numbers, rent is actually starting. You may see zero inflation next month. Now, if the Fed has the discount rate at 5 3/8 and lowers it by a quarter in September, which is what the people think they will do now. Remember, all these thoughts have been terribly wrong. In December, there was supposed to be the Fed by all the people at Goldman Sachs, Morgan Stanley, everybody on TV on CNBC, there were going to be 6 rate cuts in 2024. Yeah. There weren't. I said there won't be 6. Why would there be? But what people need to understand, it's always about the differential between inflation and what the Fed fund rates are in the short term. So if inflation is going to run at 0, or let's say at 2, let's say it gets down to 2. Some numbers are getting down to 2. If they may get to 2 or less, that means 5 3/8 is 3 3/8 of real keeping rates 3 3/8 on the short term, on 3 months, 1 day money are really high rates. And in fact, going back to Volcker, we had inflation running at 15 and he got rates up to about 18. So it's the differential, not the number. We never had consistent inflation continue to rise. We had this whole thing that I told everybody we would have inflation because of the money supply, and we did. But now we're at a point where for some time we could run at 0. So the Fed could actually take rates at that point down to 3.5 quickly. They'll never do this. But if they really thought inflation was staying at 2 and they brought it back to 3.5, then we would not have an inverted yield curve. Recessions are caused by the inverted yield curve. Now, sometimes it takes a long time. But the reason we have inflation recessions due to an inverted yield curve, by inverted yield curve, I mean short-term rates are higher than long-term rates. Remember, they're almost always, if someone says, give me $100, I'll pay you back in a month. You say, give me $1, $101. Give me $1, I'll be back in 30 years and pay you back. You say, give me $250. So time is important. Now, rates have been inverted. That means banks effectively don't lend, because they got to pay people at the bank more than what they can lend out at for 10-year mortgages, auto loans, et cetera, et cetera. So the Fed has a lot of room if inflation's at 2, if it stays there. I'm not saying it will, because the money supply is now starting to go back up, but that's an 18-month lag. So this is all very complicated stuff, I know. But but in a sense, you just have to remember there's lots of room to cut if they wanted to. They're always looking at unemployment. has the reason to cut, which went from 4 to 4.3, let's say last Friday. Well, 4.3, just so everybody knows, the rate of change is actually high going up.
But
But
that
4,
rate is bullshit, Steve. In plain English, I hate
4.3,
to say it. It's
but 4
really
point,
at 15 or 20%, I'm heard, for the unemployment and underemployment.
not 15%, but we have to take the rate
It's
itself.
high though, right?
No, I don't. In Fort Collins, it's effectively zero where I live. Where you live, maybe, Rhode Island's always a basket case. I don't know. So, but Fort Collins, unemployment here is still effectively zero. You can't get people to work. Now, it's changing over different parts of the country, but 4.3, even if it's off by 2, is still full employment. I hate to let people know. When you call people on the phone, when they ask these questions, there are people in between jobs who are like, yeah, I'm just, I quit my job last month. And 5% is full employment.
Yeah.
It is. So people are underemployed. People are having a tough time getting a job. So what does that mean? It means that we could be in a recession. Now, if government keeps spending the way it is, the real problem is what I wrote about in an op-ed in the Baltimore Sun last month. The real problem is simply this. Rates are coming down because I think inflation's coming down. But wait, there's going to be a moment in the next year or two, maybe tomorrow morning, where all of a sudden inflation's coming down and interest rates in the 10-year, the 30-year start going up. And people are like, what's going on? Why aren't they all coming down? It's because people don't care about 3 months because the federal government's going to pay them back. But all in one fell swoop, they're going to realize the 10-year note won't get paid back the same way.
But we all know the spending's going to go up, Steve. They're already
Well, this is
talking
going to
about
happen then.
a war in Iran, Ukraine and Russia,
Right.
especially if Harris gets back in. This stuff is all going to go into effect. That means more spending. That means that this country is in trouble. And they're just
Yeah.
putting, and you maybe disagree with this. I personally believe there's just a lot of band-aids being put on the
Yeah.
problem right now. And eventually, after the election, they're going to explode. Maybe you
Right.
disagree. Maybe the
No, no.
timetable is off.
I would say this, there are no band-aids being put on. It's spend, higher at the government level, run deficits. Trump ran $8 trillion in 4 years. Biden will be worse. Obama was 8 trillion in 8 years.
And Bush.
And President Bush looks like Calvin Coolidge these days, even at 4 trillion in 8 years. I mean, all since Clinton left office, it has been no band-aids. Boom. Now, the Democratic answer will always be for Social Security, tax everybody all the money. That's what they'll do. They'll say $250,000, but remember, $250,000. Right now we pay Social Security tax up to 167. So the young people they'll have a donut hole if they get in power. If they control both houses, they'll have to do this. They'll start at 250, but remember, 250 was 330 due to inflation. They've already screwed you. So if Trump gets in, he's just going to do what? He's not going to touch Social Security. He's going to not tax Social Security. His deficits are every bit as bad. So the correct thing is that after the election, probably, maybe not, maybe it won't wait, all holy hell financially is going to break loose in this country. And the 2028 election will only be about the national debt. Can you imagine we've had an election where nothing is about the national debt? Nobody talks about it. It's not really in the debate, except maybe Doug Burgum in the back saying, hey, what are you guys talking about? And no one pays attention to him. That will flip. Let me give you something that just flipped, which I called and did well with, thankfully. About a month ago, the thought was that the yen versus the dollar, the yen would continue forevermore to get weak. It was at 161. It didn't. It turned right on a dime, and what we call the carry trade, where people borrow in a cheap currency with low rates, it turned. And that's why the stock market's having volatility. The hedge funds are totally hosed. Even the Mexican peso, which was the next currency, went down instead of up. The yen went straight up because they raised rates and were about to lower rates, and everybody got hosed. That's just turmoil. If you're in the stocks listen, I don't care much about the stock market. I do it for a living. I've done it for a living since I was 25 years old. Trader at Payne Weber, ran the focus list. Look at my record. I retired at 39. I just do individual stocks. There are a lot that are cheap, and I stay away from ones that are expensive. What did I do today? I mean, by the way, don't, just so you know, I'm not advising anybody. Today, I sold the yen that I had bought a month ago at 160, sold it at 140 something. I mean, it sounds like I lost money. It's the inverse relationship on the yen. Um, and I bought Japanese stocks. Which ones did I buy? I looked up which one Buffett bought and saw them down 40, 50%. And I bought some of them on the opening and I made money. But again, I may be out of them tomorrow. What I'm saying is, I think this is a whole nother topic. I think the return of the stock picker also is about to happen. That may be my second book. The return of the stock picker replacing these ETFs that mindlessly just buy stuff is going to happen because you have widely expensive stocks and you have small cap stocks. There are many that are extraordinarily cheap. Not to get into what they are because I don't want to, but they're cheap and they have good prospects. And if rates come down a little bit, those are the ones that do the best. So what the stock market does, I don't know. I really don't know.
Regardless about the stock market, the economy is in turmoil still. People need to get ready for this. Steve, what should people do to get ready? I've been hearing a lot of stuff about bank runs. I'm a little concerned about that. Maybe that's a lot of fairy dust.
Yeah.
Inform people what they should do to get ready for the financial turmoil that is in the future, and it's coming fast.
Well, overall, and this, I don't know how people who don't do what I do, or you really shouldn't be in the US dollar. That's the bottom line. The
So
dollar,
you're moving to Bitcoin and then they're trying to move to the CBDC. Are you seeing something like that? Is that why you're
yeah,
saying?
Bitcoin, I bought a little today. I hadn't owned it. I actually bought a stock related to Bitcoin that I never thought I'd see it trade at $7 on the opening. So,
Oh,
but again, I trade some things. I own some things for years. These things I may just trade. I may be wrong. They may be down tomorrow, and I may sell them at a loss. I live a different life than what people. But if you're asking what the average person who has another job,
fair. Yeah.
who's trying to save money, first of all, you should be saving all the time, at least 10%. You should pay yourself first. You should put it into stuff. I think the real problem is going to be like 1971 when Nixon took us off the gold standard, $30 an ounce, folks. People say, oh, don't buy gold. It's 2,400 and change. So seems it did pretty well. But you'll see it no matter what. Like rates are low, so gold will have to go down. What are you talking? I don't know. I don't understand any of this nonsense. The yen's going to get weaker forever. Okay, thanks. So what I'm saying is that the dollar will get weak. So Nixon said in a speech that you can watch on YouTube that you can't believe your jaw will drop. He says if you don't leave the United States of America, you won't really notice what I'm about to do. He actually says this. The fact that people in 71 said things so stupid and got away with it, he was reelected. But the dollar is going to get weak because we've abused it. And I don't see anybody but me and Doug Burgum who might have a shot if they were president to turn this around, because there are things that have to be done to turn it around and can be done, but no one's willing to do it. Now, when this all hits the fan, they will do things. But as I said, you could wake up and have U.S. treasuries yielding 1% because they just made all of them yield 1%. And you've just got destroyed in your pension plan. Or they're going to have to run inflation higher and repress rates. There are choices to be made. They're all really bad.
Yeah.
So
I do want to get back to this because I did express about the bank runs.
yeah,
Keep hearing
I don't
about
see.
this. The FDIC is in trouble.
Oh, the FDIC is totally in trouble. They placated the banks when I was running for president by insuring all the banks. I don't know what's going to happen there, but when
I know you're not Jesus Christ. I'm
yeah,
just saying you know the financial game better
yeah,
than a majority of people.
unless rates go substantially lower, many banks are still effectively broke because they, like idiots, decided to take the cash that was coming in and go out 30 years at 1%. And as I said on your show, I think one time it's like the pendulum. The 30-year thing drops like a stone, and even the 1 month doesn't go anywhere. They should have done this. And the regulators weren't watching. And yes, there's effectively no money in the FDIC to take care of any bank runs.
Yeah.
So, but here's an interesting thought. And for people out there, I would believe that Apple computer bonds are safer than U.S. treasuries. I think we could have the day and I make Apple Computer up, say Home Depot. Say, I don't know how much indebted they are. I don't really do bonds too much. Remember I said this because this is something that's going to happen. Treasuries sell off and people buy really good corporation bonds and they don't go anywhere. That really, I think, will happen because IBM's going to pay you back. Maybe not Ford, but I mean, I don't know which companies because I don't study bonds as much as I study. And my forte has always been small cap stocks. So I worked for a firm. That's what I did. And so I think you can see corporate bonds do way better, relatively speaking, than U.S. Treasuries over the next 5 years. I don't think anybody's saying that, but that seems to be obvious to me. Now, there are tips. There are inflation-adjusted ones. There's lots of things to do. But for most people, the idea, you need to have a home. You need to get a mortgage. You need to, if you get married, you need to stay married. And if you have to have two incomes, have two incomes. But there's a lot of things people just need to do.